Hi, this is CH. This video is part of a series of videos titled My ABCs or Absolutely Biased Comments to share how an individual investor like you and I can try to find out more about an investment fund from public sources and do some basic research or simple due diligence before deciding to buy the fund or walk away. Do explore the other funds covered in this series and subscribe to the channel if you find this video useful. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the FTGF Royce US Small Cap Opportunity Fund from Franklin Templeton. This video is done as a follow-up request from a viewer's comment in my previous video covering the Franklin Income Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos and I'll be happy to work on it as long as I can find enough information on the product. To cover the fund provider of FTGF Royce US Small Cap Opportunity Fund, we need to start with Royce. No, this Royce has nothing to do with the popular Japanese chocolate brand. Royce refers to the actual boutique investment team that is running the fund strategy, called Royce Investment Partners, and was founded by Chuck Royce in 1972. Chuck is an advocate of small cap value investing, and the first fund he managed was the Pennsylvania Mutual Fund that has evolved over the years into the flagship Royce Small Cap Fund. Chuck remains as a senior advisor in the firm, where he has now spent over half a century in. Royce takes pride being a pioneer and a dedicated small cap specialist, with a small team of 36 investment professionals based in New York and managing about $11 billion in small and micro cap fund strategies. In 2001, Lake Mason, a US-based multi-boutique fund provider founded in 1899, acquired majority stakes in Royce, and therefore Royce became one of the boutique franchises under Lake Mason while still managing Royce branded funds. In 2020, Franklin Templeton Investments, a US-based global asset management firm, acquired Lake Mason. After the completion of the acquisition, the Lake Mason branding ceased to exist. Franklin Templeton chose to retain the Royce branding that is now one of the many subsidiaries of the Franklin Templeton business. This explains why the fund name is so long, and as well as the reasons for the renaming of the funds in the past if you come across the information. Franklin Templeton itself is one of the top global fund providers, managing about $1.5 trillion of assets via 1,600 investment professionals located globally. The Royce subsidiary, therefore, is just one of the many small parts of its overall business. The FTGF Royce US Small Cap Opportunity Fund is a sub-fund under the Franklin Templeton Global Funds plc or FTGF fund family. FTGF is set up as an Irish ICBC company structure and is UCITS compliant. The fund is registered as a MAS recognized scheme, which means it is suitable for retail investors. The FTGF Royce US Small Cap Opportunity Fund has 3 co-managers listed in the fund webpage and fact sheet. All 3 are indicated as having managed the fund since 2021, even though the fund was incepted way earlier. All 3 are also principals for Royce Investment Partners with at least 30 years of industry experience. Jim Stoffel and Brandon Hartman joined Royce about 16 years ago. Looking at their bios, we can see they had been colleagues for many years in several other investment firms. Both of them are actively involved in multiple funds within Royce. Jim Harvey, on the other hand, has stayed and progressed in the firm since being employed as an analyst in 1998. He is dedicated to small cap opportunistic value strategy, which is where this fund falls under. Morningstar data shows there was indeed a major shuffling of managers in 2021, though the team has remained stable since then. Interestingly, there should also be a 4th co-manager, Kavita, but she is somehow not listed in the fund materials. Kavita is listed as a co-manager in the US version of the fund, found in Royce's own website. As mentioned, there is a US version of the fund called Royce Small Cap Opportunity Fund, which is the original strategy for US onshore investors. It was incepted in 1996 and currently has over $1 billion of AUM. The FTGF Royce US Small Cap Opportunity Fund is the international version for investors outside of US. It was incepted in 2002 and currently has over $800 million of AUM. Therefore, both versions are not too different in terms of AUM and track record length. The fund has a pretty straightforward investment objective, that is to seek long-term capital growth through investing in small and micro-cap US equities. The prospectus PDF disallows copying of content, so I can't extract the text to do my usual formatting and highlighting, which is a bit irritating. The prospectus first states that the fund needs to have at least 70% invested in small and micro-cap US equities, which gives it quite a bit of flexibility to potentially allocate beyond small caps or even beyond US if needed. Though given the team's expertise, I think they should generally stay within US small caps. The fund uses the market cap of the largest stock in Russell 2000 index as the limit of market cap of the holdings in the portfolio. As per the fund name, the fund runs a strategy that looks for opportunistic situations for undervalued stocks. These situations are categorized into four main themes that are turnarounds, unrecognized asset values, undervalued growth, and interrupted earnings. The fact sheet of the US vehicle has a clear explanation of these four themes that I find really useful to understand the strategy of the fund. Unfortunately, this is somehow missing in the FTGF fund materials. Back on the prospectus, the next paragraph provides details on the stock selection process. Given Royce is a value-style investment firm, stocks are analyzed based on balance sheet, cash flow, profitability, and future growth prospects to derive the value of each company. The fund manager then invests in those stocks that are trading significantly below their estimated value with the goal of capturing the price upside towards the target price that will reflect the value of the stock. From the descriptions of the strategy and the firm, Royce seems to adopt primarily a fundamental research approach, as I didn't find any mention of them moving towards quantitative computer modeling. The benchmark of the fund is currently Russell 2000 Value Index. It used to be Russell 2000 Index and was changed in 2021. Given the value style of the firm, I do think the current index makes more sense. The fund is using the index only for performance comparison purposes and is not bounded by the index in terms of portfolio construct, so the fund can deviate significantly from the index. As mentioned earlier, the FTGF Royce US Small Cap Opportunity Fund was incepted in 2002, giving it more than 20 years of track record. AUM is currently around $830 million, which is rather small for a fund incepted so long ago. While the fund doesn't provide the detailed explanations on the four investment themes like the US vehicle, it does have an asset allocation breakdown of the themes. We can see here the fund thinks the biggest opportunities in the market are in the undervalued growth theme, which implies there are many stocks that are cheap on valuation basis but with high potential growth rates. The fund currently has about 88% US exposure, with the remaining scattered in small amounts globally. I had no idea where Marshall Islands is and that there are actually investable companies there until I did this video. Market cap shows the fund is focusing mainly on companies with $2.5 billion or lower market cap. So that's really the small to micro cap segments that are lesser researched. Sector breakdown shows the fund has some significant differences versus the benchmark. The fund has significantly less financials and real estate, offset with significantly more technology and industrials compared to the benchmark. This would be the result of the opportunities identified based on the four investment themes across the sectors. The fund currently has about 220 holdings in the portfolio. The full holdings list is available on the fund webpage and can be downloaded into an Excel file. Besides the first position that is a cash liquidity fund, the rest of the holdings appears to have a soft cap of 1%. Given the substantial differences versus the benchmark, the fund has a high 90% active share. Compared to the benchmark, the fund currently has a much higher price-to-book ratio of 2.42 times and a slightly higher price-to-earnings ratio of 18.16 times. Average market cap is lower at $2.36 billion. The FTGF Royce US Small Cap Opportunity Fund was incepted in 2002, but most of the retail share classes were incepted years later. A denotes the usual retail share class. Given the fund runs a capital growth objective, there is no expectation for income, and therefore most of the currency classes come with accumulation class. There is an annual distributing US dollar class, however, it has not paid out any distributions for years, so investors might as well go for the accumulation share class instead. Besides the base US dollar class, other currency classes available include Sing dollars, Aussie dollars, CNH, euros, and sterling. Some currencies, such as Sing dollars, has both currency hedged and unhedged versions available, which we will compare the performances later. A-share classes have a management fee of 1.5%. Adding other expenses gives a total expense ratio or TER of 1.96%, which is slightly on the high side for equity funds. Up to 85% of the management fee may be paid by Franklin Templeton to distributors as trailer fees. The fund allows distributors to charge up to 5% subscription fees, although I think anything more than 2% for mutual funds is excessive. The FTGF Royce US Small Cap Opportunity Fund has comprehensive performance data in its webpage that is compared against the benchmark. We'll just ignore the lines that include the 5% sales charge because that's useless when assessing the fund's performance. From the 20+ year chart, we can see the fund has outperformed the benchmark across almost all time periods. A big part of the returns attribution is the significant outperformance in 2021. Annualized return numbers is a little bit easier to digest. The fund has been able to deliver more than 10% per annum for 3, 5, 10, 15 years and since inception. The only time period where the fund is lagging the benchmark a little bit is 15 years annualized, where the fund lags by about 0.13% per annum. Calendar year returns gives us some sense on the volatility of the fund. We can see that the fund has almost consistently outperformed in good years and underperformed in bad years versus the benchmark in the past 10 years. The only exception is year to date, and the fund has a few months left to prove otherwise. This is clearly expressed in the pretty comprehensive risk measures provided in the fund webpage. The upside and downside capture ratios are both above 100% across all time periods, meaning the fund is consistently doing better in good times and consistently doing worse in bad times. The upside capture ratio obviously needs to be higher than downside capture ratio to generate an overall outperformance, but it is important that the fund try to reduce the downside capture if possible to improve capital preservation. In summary, the fund has historically delivered and is expected to deliver higher returns with higher volatility than the benchmark, that is Russell 2000 Value Index. This is fine for investors who have a long-term investment horizon and don't mind the volatility, but it would be hard to consider for investors who are sensitive to volatility and drawdowns. Let's run some Morningstar charts. Here is the full track record of the fund versus the benchmark using iShares Russell 2000 Value ETF as a proxy. Here's comparing the fund against the US vehicles. ROFRX is the equivalent strategy, while PENNX is the flagship US small cap strategy. The more aggressive ROFRX has led to better performance than PENNX, and therefore the opportunity strategy has been promoted earlier and more often outside of US via the international vehicle that is this fund. Next, we throw in some of the popular US small cap mutual funds from BNP Paribas, JP Morgan, Neuberger Berman, T. Rowe Price, and Aberdeen for comparison. In this 10-year chart, Royce started off relatively weaker but picked up in 2021 and eventually ended ahead of all other funds. While 2021 was a key contributor, Royce also maintained its lead through the past 3 years as seen in this chart. Dimensional and Avantis are two popular quantitative-driven ETF providers in the US. I have included here their US small cap and US small cap value products for comparison as well in this 3-year chart. Royce has actually given a good fight, lagging behind only AVUV slightly. If investors have access to the institutional share class or have the trailer fees rebated back, the overall performance would have been on par or maybe slightly better. This shows that it is possible to find good performing products in non-quantitative driven strategies and in higher fee mutual funds. Lastly, let's look at the Sing Dollar share classes. For a 10-year period, the Sing Dollar unhedged and Sing Dollar hedged classes actually have not differed in performances significantly, having less than 1% per annum difference. Even looking at past 1 year, it has not been too different. The only potential concern is the currently high Sing Dollar currency hedging cost that has been around 2.5% in the past 1 year. So for investors who think this hedging cost will stay high in the near term and has a view on Sing Dollar versus US dollar movements, going for the Sing Dollar unhedged class may lead to a slightly better result. With that, let's summarize our findings. The FTGF Royce US Small Cap Opportunity Fund is managed by Royce Investment Partners, a boutique US manager with a long history dedicated to small cap value focused investing. Royce is a subsidiary under Franklin Templeton, who helps promote and offer the solutions globally. The manager team looks to have stabilized after 2021, but the absence of co-manager Kavita in the fund materials is puzzling. The prospectus provides a pretty detailed investment strategy and process description, which would have been great, except that the elaboration on the 4 investment themes is somehow missing and only available in the US vehicle webpage. Portfolio has notable differences versus the benchmark, resulting in a high active share. This suggests the fund strategy is working hard to generate outperformance. Fund performance has been decent through the years, especially in recent years. The fund has delivered strong returns compared to the benchmark and other popular mutual funds and active ETFs in the same category. That being said, the strong returns comes as a result of relatively high volatility that is exhibited in the high upside and downside capture ratios. It would be good if the managers can find a way to reduce the downside capture ratio. In conclusion, the FTGF Royce US Small Cap Opportunity Fund is a strong performing solution in this category and might be suitable for investors looking to diversify away from the popular large and mega cap equity exposures. This concludes my absolutely biased comments on the FTGF Royce US Small Cap Opportunity Fund. Again, if you find this video useful and would like to see more related contents, please subscribe to the channel. Thank you and have a great day.